Okay, we will start. So last time we talked of preparing the two statements, isn't it? The statement of financial position and the statement of profit and loss. So today we will continue to HS and A group. So this one was examined in the last sitting. Isn't it? So the question reads this way. The following draft financial statements relate to H Limited and its investees companies S Limited and A Limited for the year ended 31st December 2022. We've also been told of the additional information, isn't it? Number one is the cost of acquisitions and the retaining earnings plus the percentage of shareholding, isn't it? The other one is on loan stock. So I will not read the additional information right now. I'll just show you the simplest format. So, like for exam purposes, isn't it? I'll show you, you just first start directly. This one is not like the previous class. This one I'm showing you like in exam purposes, isn't it? Because sometimes you can start with calculations and you don't present, isn't it? And what is needed is it being presented, isn't it? So for exam purposes, like a question like this, we'll start by, first I'll copy these ones, Control C. So this is how you do it for exam purposes. You do here, Control V, isn't it? So maybe you can name it consolidated statement of financial position, isn't it? Control Enter, Control Bold. And widen the space. So you can just start directly this way. So for the investments, yes, investments will be there. So we'll introduce another column here. Then another one, isn't it? So we'll introduce goodwill and also investment in J. In J Limited, isn't it? Then the other things will all remain Control Bold. So this one I'll do Control Bold. Isn't it? So also this one Control Bold. Also this one Control Bold. So you can start by just linking them directly this way. So equal sign. So remember, you must pass through the additional information to see if you check the dates and you also check the dates and you check the shareholding, isn't it? Maybe it was acquired maybe during the year. So the first thing is you check the acquisition date and also you check the shareholdings, isn't it? So when you check the shareholdings, you'll see A Limited is a subsidiary. It's not a subsidiary company, it's a associate company, isn't it? A Limited is an associate, while S Limited will be a subsidiary company according to the percentage, isn't it? And they were acquired during 2019 and 2020, respectively. So you'll find that we are doing a full year consolidation, isn't it? So that is the first thing you check. Then you come, equal sign. So I'll take the parent. That's the subsidiary, isn't it? You only combine parent and subsidiary alone, isn't it? Then enter. Then we just drag down, isn't it? Some values will not reflect. So this one is just for exam purposes. So the goodwill was a summation, goodwill will not be there first. So you remove what will not be there, isn't it? Investments will be there, then the totals there will not be there. Sorry. So I think cash and bank. Let me click in this cell. Sorry, you see now this the cell copied badly. So you can just copy per. If non-current assets, you just do for non-current assets alone. So I'll rub it, delete. So you come to inventory here, equal sign. So the inventory parent plus subsidiary, enter. Isn't it? Then you drag up to there because the totals will mess you up to there. Then remember for the ordinary share, we only take the parent, isn't it? Then the loan stock will be parent plus subsidiary. I'll copy the here, Control C, then I just paste it here, Control V, isn't it? Then I drag down. Isn't it? You see, the advantage of doing this way is that you already have some marks even before adjustments, isn't it? Because there are those assets or liabilities that will be just adding parent and subsidiary, isn't it? Even if you don't finish the question, you have some marks, isn't it? The question is of 20 marks. Marks are per entry, isn't it? So just adding this way, there are some marks that you get, isn't it? So we'll start now with the adjustments. So the adjustments. So ratherly, sometimes these adjustments, you can also create them as we are doing with the debit and entry, isn't it? So here are the adjustments. So we'll just bring in the adjustments directly. So we go to calculations, isn't it? So the first one is goodwill, isn't it? So for goodwill, the first one we'll use full goodwill method because we've been told about the fair value of NCI here. The fair value of NCI purchase consideration can be estimated from the share price of S Limited that was shillings 80 on January 2019, isn't it? So the share price was shilling 80, isn't it? And that one is an error because it should be 8 shillings because generally the ordinary shares are shillings 5, isn't it? And it was acquired in 2019. From 2019, it can't rise to 80. So I'll show you why I'm saying that way. So we are on goodwill. So the first one we calculate for parent, isn't it? Sharp equal. So the parent, remember goodwill is the purchase consideration minus share of net asset acquired, isn't it? So you can see the cost of investment here. I'll click on it, do less. So it acquired 80%, isn't it? 80%, I click on it, multiply by, I'll open my brackets there. Then I'll take the share of net assets acquired, isn't it? So the first one will be the ordinary share capital plus, remember these retained profits, we don't take the current years, isn't it? We take the pre-acquisition profits, isn't it? The 200 here down, retained profits here, isn't it? Plus, then when you read forward, you can see on additional information number, it is just one. On the date of acquisition, the value of building in S&A Limited were 50 million and 25 million above their carrying amount, isn't it? Buildings are depreciated at the rate of 2% per annum of reducing balance. So the main thing we are looking here, we are doing on S Limited, isn't it? So it was 50 million above the book value. So we also add the 50 million. So first you must check, isn't it? Before you add the 50 million, you check how is the question presented. You see the question is presented in thousands, isn't it? And there we've been told 50 million, so it will be 50,000. You close your brackets, Control Enter, isn't it? Then now we calculate for NCI equal, isn't it? So this is why I was telling you the share price cannot be 80, isn't it? You've been told the share price was 80, isn't it? Then you divide by, so you don't divide first, you multiply by the number of shares, isn't it? You multiply by the number of shares, divide by 5, isn't it? The value per share, isn't it? Times the shareholding of NCI, which is 20%, isn't it? So 0.2, isn't it? You get, you see. So maybe let me do commas here, isn't it? So the goodwill of NCI cannot exceed that of the parent because the parent has 80% and NCI has 20%, isn't it? So the 20% cannot be a higher value than this one, isn't it? So this one will change in the question to 8. Isn't it? Then so we'll go for now the A limited. So goodwill for A limited equal. So A limited is a associate company, isn't it? It will be just the cost of investment minus so this is the cost of investment. You less, so it acquired only 0.3%. You multiply by, you open my brackets there. So I take the share capital plus the pre-acquisition retained earnings plus the revaluation of of 25 million, isn't it? So 25, 1, 2, 3, isn't it? Then I close my brackets, control enter, control backspace to jump to the active cell. Let me see on the chart. So or rather here, let's do this way, as the question says, isn't it? 80. So then, so here, there are two methods of doing it, isn't it? You can find the NCI of the parent, the impairment, isn't it? But so impairment is additional information number 5. We've been told, sorry, the file doesn't, the additional information is not present, but I can remember it. So it was goodwill head impaired by 20% on cost as at 1st 01 2021. Additional impairment of 20% was incurred during the year. So I'll send the file, maybe when you send the answers, I'll send the file that has the one on goodwill, but the goodwill was that way. So you see, they're saying the previous goodwill that was impaired is 20%, and also on cost, and also another 20% on cost as also impaired during the year. So we have here, so this one I call it impairment. Isn't it? So we have current, then we have previous, then we have accumulated. Isn't it equal? So the current year, it has impaired by 20%, so 0.2, isn't it? And also the previous year, it is same to the current year because it also impaired 20% on cost, not on reducing balance, isn't it? So the accumulated goodwill here will be equals the current plus the previous one. Then I just drag down. Here I'll do Alt equals Control Enter, Control Bolt. Then I drag left, isn't it? So this one here, goodwill here, it will be equals this value minus the accumulated one, isn't it? The net goodwill that will go to the statement. Then remember this current one, this one will go to the statement of PL. This one we are learning, that's why we are saying that way. Then this one here, so this one will be a debit entry, isn't it? So it will go in as impairment to the statement of, so let me just write this way, to the statement of profit and loss. Then this one will also go as impairment to, this one will go to retained earnings. So retained earnings, sorry, brought forward, isn't it? Then now the accumulated one we have already credited, isn't it? So we will credit goodwill account to reduce them, isn't it? Because goodwill is on debit. So this one, the whole of it will go to as a credit, isn't it? These two are also debits, isn't it? So debit impairment, I told you, so impairment is an expense. When you debit it, it is on the debit column of the trial balance, isn't it? And you also debit retained earnings brought forward. Now, if you have been given the other statement, so here we have already debited, we have already credited this one by subtracting, isn't it? Subtracting the accumulated one, isn't it? Then we go to additional. So the good thing of presenting, even if it gets you halfway, most of the things you have already done, isn't it? The advantage. So we continue. So you can see H Limited also invested 25 million of loan stock in S, isn't it? So that one we will just remove directly, isn't it? Here, so minus 25,000, isn't it? Just that way. Then we continue. So remember the date is on 1st January 2021 and we're presenting in 2022, isn't it? Then this one here, on the date of acquisition, the value, this one we took it as a revaluation in the statement, isn't it? So this one is called revaluation gain. So maybe I'll be writing here the adjustment. So control space to select the column, then control shift plus to add, I'll add some cells there, isn't it? Then the first, the goodwill, we have already taken it. Then was intergroup loan. $25,000, isn't it? Then we also have revaluation gain, isn't it? Of 50. 1, 2, 3, isn't it? We have revaluation gain of 50, isn't it? So this revaluation gain will be added to PPE, isn't it? So shift plus the 50, isn't it? So the revaluation gain, maybe just let me give you how here we will debit. So because we are learning, here we will debit PPE, that is adding on PPE. Then we'll credit revaluation reserve. Isn't it? We'll credit revaluation reserve with the same amount, the revaluation gain, isn't it? We'll do that way, isn't it? This is how we will do. Then we continue. So revaluation gain, isn't it? So it means we have already added it to our PPE, but now it means our assets were understated, isn't it? Our PPE was understated, isn't it? And we performed depreciation on the understated PPE, isn't it? So it results into depreciation undercharge. Isn't it? So the depreciation undercharge will be, so remember this, what we are doing here was acquired, not was acquired. Let me put it here under calculations because it has something else to do on, isn't it? Remember the company we are saying it was revalued when it was acquired in 2019, isn't it? So we are in 2019, tab 2020. Then I select the two, I drag, isn't it, up to 2022, where we are, isn't it? Then I'll also have an accumulated one, depreciation, so Control C, Control V, isn't it? So remember, you've been told the depreciation was, okay. So we take 5 minutes for the Islamic people, then we come back at 45, isn't it? At 6:45. Resume. So we are talking of depreciation undercharge. So you are told here, depreciation, buildings are depreciated at 2%, at the rate of 2% per annum on reducing balance, isn't it? So we are back here. So, and it was acquired, it was in 2019, isn't it? So it was 50, isn't it? You multiply 0.02, isn't it? Times 2%, isn't it? You find it's 1,000. So the next year it will be equals the 50, you minus. So you put them in bracket, put them in bracket. You multiply 0.02%, isn't it? Then now for the next year, it will be equal, the same amount. So I start with bracket, isn't it? Then the 50 minus, I'll introduce in sum, press tab. I select the two numbers, isn't it? And I come here, you see R18, this one, the first one, this one. I press F4. I lock only the first one. The second one I want it to move, isn't it? I close the bracket of sum. I then close the bracket. Then I multiply by 0.02, isn't it? Enter. Then so for the last one, I'll just drag. Sorry, so I forgot. So here, isn't it? You also lock this first one so that it doesn't move to O. Isn't it? You can see here it is O11. So you also lock it, doesn't move. This one here, F4. Isn't it? Then enter. Then I'll drag. Isn't it? Then I'll come here, I press Alt equals, Control Enter, Control Bold, isn't it? So that this is the accumulated depreciation overcharge, isn't it? It has been overcharged. Alt HB or for bottom border. So here, remember, if here we don't have the income statement, but if we had an income statement, we'll present the one for 2022 in the income statement, while the other one will less from retained earnings, isn't it? But because we don't have the income statement, so the journal entries here will be, we debit group so debit group retained earnings, isn't it? Then you'll credit group assets, isn't it? Or PPE, you credit PPE, isn't it? The same amount. So here, equal this one here, enter, then this one, the same amount. So I'll do Control C, then Control V. Sorry, it is copying the format, so Control Z, Control Alt V, I copy the value alone, isn't it? So here, I've told you, if we had an income statement, this one we will present with less from cost of sale, isn't it? So, like, let me say like this, you see retained earnings is the income statement, isn't it? Retained earnings is the income statement, isn't it? So when I say I debit retained earnings, like we can use this one for, because it had the income statement, isn't it? This one had an income statement. So you can see, you see, after all the profits, we always add to what will add to retained earnings. Then we have retained earnings balance brought forward, isn't it? So this one is what we are talking of you. So because it has added everything here. So if I'm saying I'm debiting retained earnings, isn't it? So to debit retained earnings, it's like I'm reducing, isn't it? So to reduce, we add cost of sale, we increase our cost of sale. That's why this depreciation undercharge, this one will be taken to cost of sale, and the others here will be taken to retained earnings brought forward, like how we did here under impairment, isn't it? The others, but now the accumulated one, you minus from PPE. So I'm just talking, I've said retained earnings is equals to income statement. So like here, cost of sale, then we have retained earnings, retained earnings brought forward, isn't it? So it's just as simple as this is what will go there, isn't it? And what will go here will be sum, rest up the sum of these three, isn't it? Control Enter, of which this is the group retained earnings. So everything here, this one, so cost of sale and retained earnings, isn't it? Because this one brought forward, because this one was for previous years, isn't it? So we less from, we add. So when we say you debit group retained earnings, it means we less, because retained earnings have a credit balance, isn't it? So we less from cost of sale, then we also less from group retained earnings. I'll show again. Remember, this transaction is between the parent and subsidiary. Another thing, still under group retained earnings, isn't it? So, because it's a transaction between the two, let me select this one, Shift plus Enter, isn't it? So, here we debit NCI account. So this one is, we are going direct, isn't it? This one we debit NCI account. And now you will not debit the whole amount, isn't it? You debit the percentage. So this 1.2, you multiply by So let me use this one, isn't it? Then here it will be equal. So this one here minus the value, isn't it? And this one goes to group retained earnings. Like you can see, let me use again here. See, I want this point to be home. Here is where we have done this one. You see this one, this depreciation undercharge percentage of NCI. Let me use this one. Here, you can see depreciation we have debited, isn't it? This is the debit side. We have debited depreciation undercharge percentage of NCI. While also group retaining has depreciation undercharge percentage of parent, isn't it? Here the percentage is not there. It goes in as a percentage of the parent, isn't it? So that's why we have done this way. Hope you are getting it. Then, so there's nothing else on the additional information. So the other thing that we can extract from this additional information, number one, isn't it? It is this one here. Where is it? The 25. So we can look for the investment in J, isn't it? Investment in J. It is A Limited, sorry, in A Limited. So equal. So investment in A Limited, let me show you. Some people are saying they don't have these ones. So it is here. The cost plus share of post-acquisition profit plus reserves less impairment, isn't it? So we'll go direct here, equal sign. So the cost, it was 300 here, minus the share. So it was 3%. You multiply by, I'll open my bracket, isn't it? Post-acquisition profit. So I'll open another bracket because here you don't have an income statement. So I'll take pre minus post, isn't it? So the pre-acquisition here, so remember the associate company, isn't it? So the retaining earnings here minus the post, isn't it? Minus the pre to get the post, isn't it? I'll close the first bracket. You can follow from up here, isn't it? Then I'll add the 25 that was revalued because of reserves, isn't it? And remember, it is 0.3. That's why I opened two brackets to less these ones, then the 25, isn't it? Then I close the whole bracket. So this 0.03, I am multiplying the subtract minus this one to get the post-acquisition retained earnings, then the revaluation that was there of 25, isn't it? Enter. Sorry, so I've forgotten. So here, let me just, as it is at enter, just show you here what we are saying. You see here, isn't it? We've added the cost. Then the share of post-acquisition profit. This is where we are minusing the current minus pre, isn't it? Then reserves. This one is where we are multiplying the 25,000. Then less impairment, isn't it? So you have not less impairment. So the same value minus impairment. So impairment in the joint venture, isn't it? And we had calculated it here on the left, I think. Only this one, isn't it? So sorry, I'm confusing here. This is plus, isn't it? Yeah, like, let me just, yes, that is it here. The cost, you add share of, you don't less, you add share of post-acquisition profits, then also reserves, then you less impairment, isn't it? So this one is the cost, E37. So this one is the share of 0.3. Then this one is the post-acquisition profits, isn't it? The current minus pre-acquisition. Then this one is the 25 revaluation, the reserves, isn't it? Minus impairment. Isn't it? So this one will go here directly, equal there, that way. Isn't it? So then we can finish on non-current assets, isn't it? So let me put, I like when they have commas so that you can easily know the value, isn't it? So what we are missing in is the investments here, isn't it? So investments here, because we added minus, because we are removing the other investments, isn't it? We are removing these investments from the investment of the parent, isn't it? Minus also this one, then minus H Limited also invested 25 million in the loan stock of S, minus also 25,000, isn't it? Then you go back. So here I can press Alt equals, Control Enter, Control Bolt, Alt HBP for a top border, isn't it? You see, the good thing of doing this is that you go when you are finishing, isn't it? Alt HBT. You'll be earning marks while you proceed. Instead of you proceed, then you come to present. That's why I was saying this is the format when you come across such, isn't it? So we'll continue. So we've talked of the accumulated and I've showed you how the entries are done, isn't it? NCI will go this one, group retained earnings, isn't it? And also PPE we credit. What you did we credit PPE? So our PPE, this one was parent plus subsidiary plus revaluation gain N9, isn't it? So you credit this one, so you minus. Isn't it? Then we still continue. So we go to the additional information. So I can say fully that we have dealt with additional information number 1, everything, isn't it? Then we go to additional information number 2, isn't it? So on January 2021, H Limited sold an item of plant at a selling price of 75 million, reporting a profit markup of 50%. The plant depreciates at 20% per annum, isn't it? So there we have unrealized profit on sale of fixed asset, another adjustment. So unrealized profit, I'll write, because I'll send the file over, on sale of fixed asset, isn't it? So this one, it is there here. It's under basics here. Unrealized profit on sale of fixed asset, it is the transfer value times profit margin, isn't it? Equal. So the transfer value was 75,000 because we are working in thousands, isn't it? You multiply by the gross margin. So remember, you've been told the markup was 50%, isn't it? So 50% is like a half, isn't it? So a half to get the margin is a third, isn't it? You just add the 1 to the denominator, or is it the numerator? I don't know. But you add 1 to the 1 at the bottom, isn't it? Because 50% is a half, you add the 1 above to 2, isn't it? It becomes 1/3. Isn't it? You find that we have unrealized profit of, I'll widen there, of 25,000, isn't it? So how will we adjust it? Isn't it? So the first one will be with debit. So unrealized profit on fixed asset. It means our fixed asset had been overstated, isn't it? So you can start first by you credit PPE, isn't it? So you credit PPE, the amount 25. Then you debit. Which account will you debit? Group retained earnings, isn't it? So I'll just write group RE for group retained earnings. The amount is 25. Isn't it? The amount also it is 25. Isn't it? And I'll grab that one there. Isn't it? So group retained earnings we will work for. Then you see, we sold our assets to our subsidiary, and now the subsidiary, we are combining the two and we have some profit, isn't it? So the profit is not an asset, isn't it? So we have depreciation overcharge because the profit was considered when we were calculating depreciation, isn't it? Depreciation overcharge. Isn't it? Control C, I'll copy. Control C, I'll paste it here. Control V, isn't it? So remember, we are being told in 1st January 2021, isn't it? Here on 1st January 2021, and we are on December 2022, isn't it? So you come back 2021 here, isn't it? Equal. So this one you multiply by 20. So 20%. I forgot. So you can write it 20 or 0.2, isn't it? 20%, isn't it? Remember, it is on reducing balance, isn't it? So I'll open my bracket, this one, minus the 5, isn't it? I close the bracket. I multiply by 0.2, isn't it? 20%, isn't it? Accumulated, alt equals, control enter, control bolt, isn't it? Then as I was just saying, so this depreciation overcharge, isn't it? We have overcharged depreciation. So we will debit PPE. Then credit group retained earnings, isn't it? So group retained earnings, isn't it? Then we also credit some to NCI, isn't it? NCI account. NCI account, isn't it? So here it will go the 9,000, isn't it? And here it will go according to the shareholding, isn't it? The parent has 80%. So here it will be the difference between the two, the 20%, isn't it? That way, depreciation. So I'll bolden it. Depreciation. Depreciation overcharge, isn't it? Then we under overcharge. Then we come to our. Let me bolden this here, isn't it? So remember, the first one is the parent plus the subsidiary plus revaluation gain minus depreciation undercharge, isn't it? We credit it, isn't it? Then we will minus unrealized profit on sale of fixed asset, UPFA, isn't it? Because we credit, isn't it? Then we will add depreciation overcharge because we have debited here, isn't it? Those are the entries. Enter. Then we continue. So just in case you are provided with the, we are required to prepare an income statement, isn't it? So this one here, this one will go to the current year. Now it will go to cost of sales, isn't it? While this one will go to retained earnings. This one will credit cost of sales to reduce them because we have overcharged, isn't it? Then this one will credit retained earnings brought forward. That one has brought forward, like the one for impairment, like here. I think, where was it? I think the point is from this one here, where we are doing. So let me show you where we are presenting. Where did we present? I think it's next year. So here, isn't it? You see this one here. This one we were removing impairment. Let me not, we'll just get the concept. we are removing the impairment for the year. Let's continue with here, isn't it? So we have already done with depreciation overcharge. This one I'll control bolt so that I know. Also this one, I know the entries, isn't it? So again, I'll be back to the additional information, isn't it? So we finished this one, including the depreciation, isn't it? So we go to additional information number 3. S sold goods at a selling price of 20 million to H Limited, a subsidiary selling to a holding company. So that one is an upstream sale at the normal gross profit margin. A quarter of the goods still remains. So the normal gross profit margin will be a third, isn't it? So this one results into unrealized profit on closing stock. Isn't it? Unrealized profit on closing stock equals, so the goods were 20 million, so it will be 20,000, isn't it? You multiply by a third, isn't it? Then you multiply by, so a third is the 50. 50 is the normal because 50 is what we have worked with, isn't it? So that one will be the here. The normal gross profit margin 50. So the markup was 50. So this one will be, this is a half, this one will be a third, then a quarter of the goods, isn't it? Multiply by a quarter, isn't it? Then we'll go back to it, isn't it? Let me give you the entries so that it doesn't disturb you later, isn't it? So unrealized profit on closing stock, isn't it? So the first thing we'll do, we'll debit group retained earnings. But here, isn't it? Because it is an upstream sale, when the sale is upstream, we also debit the NCI account. When the sale is upstream, NCI account, isn't it? Then we credit inventory, the full amount. So here we will credit the full amount, isn't it? So I can just do Control C, then Control Alt V. I want to copy the value directly, isn't it? Then I can rub here. Sorry, Control Z. Then this one I'll remove, isn't it? So what will go to group retained earning is the percentage, isn't it? 0.8. You multiply by this, the amount there. Then the difference is what will go to NCI, because the sales are upstream, isn't it? Because the sales are upstream. We are doing that because the sales are upstream. Let me do at 2 decimal places, isn't it? Here is what I'm showing. Here is what we are doing. Statement of here, isn't it? Unrealized profit on stock if the sales are upstream from subsidiary to holding company, isn't it? And also you have UPS now that will go to group retained earnings, the percentage that will remain, isn't it? We move on. So those are the entries. So maybe the best way I told you, if you go while putting the entry, isn't it? So to credit inventory, because inventory is an asset and it has a debit balance, to credit it, I less, isn't it? For group retained earning and NCI, we'll compute, because here somewhere we'll introduce another one called NCI, isn't it? Control board. We'll introduce the NCI. So we'll calculate them there. Don't worry. Then we'll go on. So the group retained earnings. Remember, this one is the income statement, isn't it? It is in the statement of financial position. In the income statement, isn't it? We add it to retained earnings. isn't it? So when we say we debit, it's like we will add to cost of sale, isn't it? Because cost of sale has positive one. It has a positive entry, isn't it? That's why we always add to cost of sale. Here is it. So here we'll add unrealized profit on closing stock. Continue. Then we go to the additional information. Then I'll bring this as a bolt so that we know where we go. Then continue. Then they say H Limited sold goods to A Limited. It's an associate. An associate we account using the equity method. So that one will not reflect, isn't it? Then we have at the beginning of the year, H Limited had goods to a value of 10 million purchased from S Limited in the year ended 31st December 2021, isn't it? So that one is unrealized profit on opening stock. It will result to unrealized profit on opening stock. So equal, isn't it? It was 10, 1, 2, 3. You multiply by the gross profit margin of a third, isn't it? So this is the unrealized one. So maybe the entries that we will do, isn't it? First, we will debit group retained earnings and NCI as this way. But because, remember, this one is for the previous financial year, isn't it? It's on the opening. So like, let's just write it so that I want the point to be home. So we'll debit group retained earnings, isn't it? We also debit NCI account. Then we credit opening stock, isn't it? Or opening inventory. Isn't it? So this one will go in the full amount, Control C, Control V, isn't it? Then here it's so Control Z. I like to do Control Alt V so that I don't copy. I just copy the values directly and they remain. Even if I delete here, the values will remain, isn't it? Then the group, this one will take 80%. I multiply by this one, and the other one will take the 20%, isn't it? So which is the difference between the two, isn't it? Well done, that. We continue to the additional information. So included in the trade receivable and payables in each respective company was this one, due to H and S. Then this one is intergroup balance, isn't it? Then this one will not appear because we don't consolidate an associate. Then a close check in S Limited books revealed that the receivable of S Limited had 30 million due from H. This anomaly arose because a check of 5 million had been sent to S on 29 December 2022, but had not been received. So that one is cash in transit, isn't it? So you have intergroup balances, intergroup balance. I'll show you the journal entries. You debit payables, you credit receivables. Then we talk of cash in transit. So cash in transit will debit our cash. Then we credit our receivables. Isn't it that way? So This one was 25, isn't it? Also, this one was 25. This one was 5. This one was 5 also. Control bolt, isn't it? Then you can decide so to like or we can I want to finish then but these ones we were entering, so this one does not appear anywhere. So we'll adjust the payables. So payables is a liability. I told you a liability has a credit balance, isn't it? If you debit, it will be lessing, isn't it? You less 25. That's why they say you less. So you less the 25. 1, 2, 3. Sorry, I've added instead of less. So control Z, isn't it? So we are here at intergroup balances of 25, 25, isn't it? So payables are less with 25. So trade payables here they are minus 25, 1, 2, 3, isn't it? Then also trade receivables are less minus 25, 1, 2, 3, and I also less 5,000, the cash in transit, isn't it? While the cash in transit, I'll add back to cash at bank plus 5,000, the cash in transit, isn't it? So we continue. So another one is, meanwhile, all the companies had paid their interest on loan as at the year end. And remember, H invested also in those interest, isn't it? Intergroup interest paid, isn't it? Tab equal. So remember, it invested 25,000 in this 25 million in the loan stock of S, isn't it? And you can check now the financial position statement, isn't it? The loan had an interest of 10, isn't it? So intergroup interest, it is times 0.1, isn't it? Times 10%, isn't it? But remember, on 1st January 2021, so 2 years have gone, times 2. Isn't it? So this one, remember we always less, isn't it? So the adjustment for here, debit group retained earnings, isn't it? We credit interest receivable, isn't it? Or interest received. You'll find maybe if it was we had an income statement here, we could have interest received, isn't it? But because we don't have the income statement here, we're just given this one, isn't it? So Control X, Control V, Control C, Control V, isn't it? This one I'll bolden it, isn't it? Then I think we finished on the additional information. The one for goodwill we talked of it, so you are at required, isn't it? So we'll continue with calculations here. So we want to calculate the retained profits and NCI, isn't it? Retained profit and NCI, isn't it? So we'll start with NCI, but you can calculate one and look for the difference, isn't it? We start with NCI. For exam purposes, don't waste time going to calculate everything, isn't it? So remember our NCI, isn't it? We'll take our ordinary share capital, retained earnings, and evaluation. Is anything else? Then we will go back now to the statement, isn't it? And then impairment on the other side. So this one, so remember it is 0.2, isn't it? 20% because NCI is 20%. We confirm the, so I'll open the brackets. I just take all the net assets, isn't it? So I'll take this one. Sorry, let me be back to the, I never pressed equal sign. So I'm here. So we always must start with the equal sign, isn't it? So I'm taking also for retained earnings and revaluations at once, isn't it? Because I'll not be back doing it again. So I'll take this one here, isn't it? Plus the retained earnings, plus, remember here we are taking the whole, plus 50, isn't it? It was revalued to 50 million, isn't it? The revaluation, you remember? Control enter, control backspace, you jump to the active state. So this one is inclusive of the other two, isn't it? Then what else is remaining? Then I will go back to now to our adjustments here, isn't it? To see what comes to NCI. So depreciation undercharge, we debit NCI. So debit is on this side. So this one is depreciation undercharge, isn't it? Then this one doesn't count here. Depreciation overcharge, you credit, so on this side. So these two, let me do this way, they are here. So these ones you can call them as net assets, isn't it? Net assets, because they include the retained profit and the revaluation, isn't it? Then you have depreciation overcharge equal this one here, isn't it? We also have unrealized profit on closing stock. So UPSC, isn't it, equal the one that goes to NCI alone. Then we debit unrealized profit on opening stock. The one that goes to NCI alone. This one here. Then there is nothing else that goes to NCI, isn't it? So what we have is goodwill again. Here, goodwill. Isn't it? You'll find the goodwill of NCI, isn't it? So you, instead of like separating the two, isn't it? You can do it as 20% of the whole, isn't it? So 0.2 multiply by the whole goodwill. Sorry, I took the wrong one, so it is 13. Isn't it? Then what we'll have on this side is impairment. So I'll take the whole. No, do you take the whole? You don't take, you take the parent and subsidiary, isn't it? Because this one, we already did it when we are doing investment, isn't it? So the two sum, isn't it? So remember this one is 0.2 also times 0.2 because NCI is 20%, isn't it? And here I'll correct times the sum of the two, because the other one we took it under equity method, isn't it? So I'm being reminded to close the bracket. I'll put a left border Alt HB L for a left border, isn't it? Then is there anything we're forgetting on NCI? Let me confirm via this one. So impairment, depreciation on other upstream sales, ordinary share capital, share premium, goodwill, and depreciation. So there's nothing you're forgetting there. So I'll find the total. Alt equals control enter, control bolt, isn't it? Then so I'll find the difference equal. So this one, you less the sum press tab of this, isn't it? I'll close the brackets, control enter, isn't it? Control bolt, isn't it? So this is NCI to statement of, isn't it? I bring it in. So NCI here equal, isn't it? I can also find the total here equal this one plus the sum press tab of these ones, isn't it? Plus the sum of current assets, control enter, yes, control bolt, alt HB, U for two borders that way, isn't it? Then I also find the sum here. So equal sum, press tab, then I select everything. So from current tab up to there, control enter, control bolt, isn't it? So we have some difference here. So the difference will be this one here minus this one, isn't it? Of which will be displayed as retained profits, isn't it? So for example purposes, you can just reflect it directly. Better you lose that mark than waste time and you don't get to them, isn't it? Yes, if you have given markup, you change it to margin. Always you must, the unrealized profit, we find it via margin, isn't it? So here it will be 2, 2, 1, 10, 2, 8.06, isn't it? So you just confirm it, alt HBU. So retained earnings. So retained earnings. So obviously we start with these ones, isn't it? So balance, brought forward, equal, not balance brought forward, sorry. So shift tab, parent, retained earnings. So we'll take only the parent, retained earnings. Where is it here? So this value here, isn't it? I never pressed equal sign, sorry. But I thought I pressed. So equal the value here, isn't it? Then we talk of subsidiary, sub, post, retained earnings, isn't it? Equal. So 0.8, you multiply by, you open bracket, sorry, at 0.8 is, so 0.8 you multiply, then you open your bracket, post acquisition, isn't it? So this one minus the pre, this one here, close your brackets, control enter, control backspace to jump to active cell, associate, post, retained earnings, equal. So this one, so equal 0.3, isn't it? The percentage you multiply by you open bracket, this one minus the 300, isn't it? You close your bracket, enter, isn't it? Remember, we also have the revaluation. The subsidiary was revalued to 50, 1, 2, 3. You multiply by 0.8, isn't it? Then the subsidiary, the revaluation in associate equal, it was revalued to 25,000. Then we multiply by 0.3, isn't it? Then what else are you forgetting on this side? I'll do a border, Alt HBL for a left border, isn't it? So depreciation, also we have depreciation overcharge, isn't it? So debt overcharge equal to the one that was going to retained earnings, isn't it? Then impairment equals to the impairment of the two. So the one that will go, you remember the other one has gone to NCI. So 0.8, you multiply by, you open your bracket, the two there, close bracket. So I'll introduce here some. Then what else do you have? Then here, so this one also will credit 25, unrealized profit on sale of fixed assets equal the 25. Then depreciation overcharge, we've talked of it. Then this one, unrealized profit on closing stock, the one that would go to the parent there. Then unrealized profit on opening stock, the one that will go to the parent there, isn't it? So you can see the retained earnings is a process somehow, isn't it? Then what else is remaining? Okay, I see nothing else. Let me just confirm from here. So the post-acquisition in retained earnings and joint venture. So you never had negative goodwill, isn't it? So it's like that is just a mean. Yes, the revaluation, we took it. Okay, I was forgetting this one. Interest received, isn't it? Interest paid. Interest paid with group interest, isn't it? That one we must remove. So we'll remove the 5,000. And what else is remaining? I don't see anything else remaining. So we'll find the total here. Alt equals control enter, control bolt, isn't it? Then I find the difference here equals this one here minus the sum rest tab of these ones here, isn't it? I close the brackets, control enter, isn't it? You can see that retained earnings to SOP isn't it? To find it is 1028, and that's not the value we got, isn't it? We got something like 2,222. So the problem comes in where I told you here. the fair value of NCI cannot be higher even than the goodwill here. But even if it is at 80, let me delete this one here. You can find that the value is, the difference is 1159, and this is the difference. So it can be just like maybe a small error. I don't know where it is coming from. Yes, the impairment is good. Also the goodwill. So I can see where the problem comes in. So here, that's why I always try to separate the two, the parent and the NCI goodwill, isn't it? There are so many adjustments. So here, where is the NCI? This goodwill here, I enter the NCI's goodwill alone, isn't it equal this one? Then the impairment, I enter the accumulated impairment in NCI alone, isn't it? This one here alone is the one in NCI alone, isn't it? I don't do percentage. Then now to retained earnings, isn't it? Now to retained earnings, I'll take the impairment here. I take only the impairment of the parent, isn't it? Not plus the NCI, because the NCI I've already taken it, the 64 here, I've already taken it here, isn't it? I've already considered it there equals, so I'll take this one, isn't it? So, and it is something automatic. You can see, but the difference is a little bit smaller. I think there's just some error on the NCI. This one minus this one here. 68, it's a very big error, but the figures, remember, even these figures here are in millions, isn't it? These ones are in millions. So these are very small figure, because they are, isn't it? They are in millions. You are in thousands, I mean. In thousands. So like it's 1,000. You can see it is like 68. The figures is in thousands. So what I was trying to do is the retained earnings. But I told you the better way to do it is this way, just less the difference, isn't it? So sorry. So the up one here minus this one. So it wants you just had to type it in 1460, 428.8. The reason I'm telling you that way is you don't have to waste time trying to find out this one. You just work on the NCI. After you finish the NCI, isn't it? After you finish the NCI, after you finished on the NCI, don't go to do retained earnings, isn't it? Because retained earnings will take a lot of time. I may have seen the error where the error is coming from. You see here, we said 8, you multiply by the shares, isn't it? So let me just click in the cell so that it shows you this is F18, isn't it? Here we never removed the net assets acquired, isn't it? We talked of 8, so sometimes it's good to go back and review, isn't it? Times, so we want to find the fair value of NCI, isn't it? Times the number of shares divided by 5, isn't it? Times the shareholding of NCI, of which the shareholding of NCI is 0.2, 20%, isn't it? So this one, you have to less net assets. That is what we forgot. So I'll put it in bracket, minus the net assets, isn't it? So 0.2, this is the percentage of NCI. We multiply by, we open bracket, isn't it? So the share capital plus the pre, isn't it? So we are here plus the pre plus the 50 that was that was revalued, this 50 million here, isn't it? Control enter. You see when it's already balancing. Or let's check. So yes, you find now the NCI of goodwill is 10. So the good thing of Excel is it is automatic. So by the way, this is it, isn't it? Because also when we are doing that way, the goodwill of NCI was above the parent. I told you it cannot be above, isn't it? Because we had forgotten to list this one. Let me show you here under basics here. So this NCI, isn't it? You list share capital, share premium, retained earnings, and revaluation. So in our question, so it is the percentage of it. So we list share capital and retained earnings. Pre-acquisition, then we had revaluation of 50. I think I can see. Someone is, so I think it's done that way. Once it is balancing itself already, or it's still not. It's still not. So this is the value that is taken to retained earnings, isn't it? This is automatic, the one that was taken here. So I'll do equal this one here, enter. Okay, sorry, Control Z. I'm here, equal. Then I take this value here. I don't know where the problem is coming from. So maybe this one here minus this one here. It's still the same. But the point is, or is there that I just need to, the point is that you first try to present, isn't it? Before you come to calculations. You remember the question has 20 marks. Let's see how many entries are there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So 20 divided by 15. You can see it is almost 1 mark, isn't it? Marks that don't have adjustment. We have this one, intangible asset, also investment, also goodwill, I know most can. Also investment in J, most can, isn't it? Inventory, just less UPS, isn't it? Trade receivables, it was only intergroup balances, of which it is common, isn't it? Bank, you add cash in transit. Ordinary share capital, take the parent only. These two maybe you fail, isn't it? Then the others you get. So the advantage of trying to present fast before you come to the adjustments, isn't it? I think we have like 15 minutes. The 15 minutes I think we can try and do this one. The one also, it was just the statement of financial position, isn't it? Let me check the charts. Isn't it? So the advantage, you start fast, isn't it? Let me show you this way. You select the data, Control C. I paste it somewhere. Isn't it? Control V. Then I check the shareholding, isn't it? H acquired 80% of S Limited when the retained were 20. So 80% and 50, it means the other one is a joint venture. So you're only consolidating these two, isn't it? H Limited, Tab and S, isn't it? The other one, this one is joint venture, isn't it? So the consolidation will be like this one plus down there, isn't it? Then maybe you copy this one, the format here. So this one will be a little bit faster. Then you paste it here, Control V, isn't it? I widen the space. So then this investment in S will be changed to goodwill. Isn't it? Investment in J will remain as investment in J. Isn't it? Maybe I widen the space there. Isn't it? Shift control shift plus. I add another cell there, then control shift, control minus. I remove the cell that I just wanted one addition, isn't it? So equal to the parent plus subsidiary, isn't it? Then the goodwill will skip. So you can copy just control C, then up to inventories, control V, then you drag, isn't it? Control C, you copy the same thing. So remember, it doesn't come here under share capital. So here you equal only the parent, isn't it? Share premium only the parent. Then earnings a calculation and we'll introduce NCI, isn't it? Notice there some NCI. Then those two are a calculation, debentures. So I'll copy from up here because debentures I'm just adding them, control V. Also payables, control V. Then I drag down, isn't it? But remember here proposed dividends, isn't it? You must remove intergroup dividends. So we've already started the adjustment, isn't it? So to remove 0.8, the percentage times 40, isn't it? Because this one is a subsidiary, isn't it? So I'm removing the intergroup dividends early enough. Then so we'll be back now to the additional information. So of course we will calculate goodwill, isn't it? So the fair value of S was in excess by 30 million on the acquisition. Equipment had a remaining useful life. As you can see, the question we have not been told of the fair value of NCI, isn't it? We have been just told the fair value of net assets was in excess by 30 million. So it was an equipment, isn't it? So it means it's the partial method, isn't it? So here goodwill equal. So the partial method. So the cost, so you see the investment in S is the cost minus 8.8, I mean 0.8. You multiply by, I'll open the bracket, the share capital plus share premium plus pre-acquisition retained earnings, of which you have been told, sorry, here it is, the fair value of NCI was 80 million. It means it will be full method, isn't it? I can press escape. So maybe, because I don't want to be moving here and there, I'll just copy this thing here, control C. I bring it here, control V, isn't it? So that I just go with it directly. So the first thing was goodwill, isn't it? So for we have the parent, then we have the NCI, because you've been given the fair value, isn't it? So here it will be equal the cost for the parent. So the cost was 300. You less net assets acquired, isn't it? So 0.8, because it was taking 80%. You multiply by, open the bracket, isn't it? Share capital plus share premium plus pre-acquisition retained earnings, of which you are told here it was 20 million, isn't it? You come confirm the values here. These ones were, it was not written, so these ones were in millions, isn't it? This value were in millions, so you must confirm that. So plus 20, isn't it? The value is in millions. Then you check if there was any revaluation, isn't it? And note number 4, we've been told the fair value of S Limited was excess by 30 million on acquisition, isn't it? So plus 30, isn't it? Then you close your bracket, enter, isn't it? To come calculate the NCI of the goodwill attributable to NCI, isn't it? So the fair value was 80, isn't it? So 80 minus, so this one will be 0.2 NCI, isn't it? You multiply by, you open your brackets, share capital plus share premium plus 20 share retained earnings, pre-acquisition retained earnings plus 30 revaluation, isn't it? Control enter 10, isn't it? Here we have goodwill computation. Let me check the chart for any question. So I don't remember computing goodwill of the parent in there. So let me just take you back slowly, isn't it? Goodwill computation, we had purchase consideration, isn't it? Then we had fair value of NCI, isn't it? Then we have less net assets acquired. So we have share capital. Let me take you slowly. We also have share premium. We also have retained earnings, isn't it? Retained earnings, pre-acquisition. Then we have revaluation. So you are doing something like this, revaluation, isn't it? The purchase consideration here, it is 300, isn't it? The fair value of non-controlling interest, we've been told here it is 80, isn't it? Then the share capital, isn't it? So for the parent, it is here, this is NCI. For the parent, it is 0.8, isn't it? We multiply by 400, isn't it? Or let me just see what was it. Sorry, it is here 200. So equal sign, isn't it? Share capital is 200. Hapo hivi kwa NCI. Share premium 0.8. So equal sign 0.8 to multiply by 100, isn't it? Then equal sign 0.8 to multiply by the 20 that was here, pre-acquisition retained earnings. The 20 here, isn't it? 20, isn't it? Then equal 0.8 to multiply by, was in excess by 30 million. So it will be 30, isn't it? So let me see, this one I'll lock it. I'm just trying so that I do the other one faster. This one entered as a value, So I can do this way, equal to this one, isn't it? Then I drag down, then I come. Sorry, so Control Z. I'll copy here, Control C, Control V, isn't it? Then I'll be changing here. Maybe I'll drag down first before I start changing. Control Z. So this one. So like here I want to be 0.2, isn't it? The Excel is not bringing what I want. So 0.2. So equal 0.2. You multiply by 100, isn't it? Equal 0.2. You multiply by 20, isn't it? Equal 0.2. You multiply by 30, isn't it? So and then you find the value equal. So this one, the purchase consideration minus the sum, isn't it, of this one here. Control enter. I'm being reminded to close the bracket. Equal this one minus sum. I'll close the brackets, control enter, isn't it? Alt HBP. This is what we are doing here. Isn't it? This is what we are doing here, so that we are getting the one attributable to the parent and the one attributable to the NCI. Later on, you always add, isn't it? You always add this one plus this one. Find total goodwill, isn't it? Okay, we'll continue. I'm not, and then we have also the joint J limited, isn't it? The goodwill that J limited equals, isn't it, the purchase consideration, of which it is 250 minus share of net asset acquired. It acquired how many percent? 50, isn't it? Additional information number 2 here, so 0.5. You multiply by, you open your bracket, isn't it? Share capital plus share premium plus, you come here. What is it? 100, isn't it? No revaluation on the joint venture, isn't it? There. Then, so I'll wrap this one because it was just doing so HHBN. So remember, we are here, so we have done also this one. Then we have been told goodwill in S and J is estimated to have impaired at 8 and 12 million, respectively, impairment. This one is 8, and so this one is 12, isn't it? So remember, this 8 is for both the parent and the NCI, isn't it? Because we'll have somewhere, because we always do this way. So this one will be 8 times 0.2, the percentage of NCI, isn't it? While this one will be 8 times 0.8, isn't it? So equal sign. So of which it will come to 8. So we always separate here because you see here, isn't it? Here, for example, here we have impairment, if full method. So here it will go impairment of NCI alone, isn't it? Do not go the impairment of all, because we will be calculating also the NCI, isn't it? We also be calculating the NCI, isn't it? Then, so we have finished on goodwill. Then when you see this excess by, isn't it, revaluation gain? By, it was excess by 30 million, isn't it? So the excess, it results to depreciation under charge, of which it will be 30, isn't it, divided by 5, isn't it? We had the remaining useful life of 5, isn't it? Then remember, this depreciation under charge, there's the one that will go to the parent and the one that will go to the NCI, isn't it? Then S Limited sold goods to H Limited. It is an upstream sale, isn't it? 80 million marked up at 33 and a third, isn't it? So the markup was 33 and a third. So to change it, the 100, isn't it? Because 33 and a third is 3 times 33, isn't it? Equal 3. You multiply by 3, isn't it? Then you add 1, isn't it? So it will be 100 over. So it is 100 over 3, isn't it? This is this one is marked up, isn't it? Marked up. This is markup. So for markup, we have to change it to margin, isn't it? So to change it to margin, it will be like 33.33 divided by, so 133.33, isn't it? Equal sign. You just add the profit to the denominator, isn't it? You add just the profit to the denominator. It is always that way. So this one is the profit margin, isn't it? Then a half of the goods remained. So unrealized profit on closing stock equal the profit margin, we multiply by 80, isn't it? Then we multiply by a half, because a half still remained, isn't it? I think the point where it is home, half still remained. So you change this to margin, isn't it? Like, I don't know if this computer is 33. Cannot write, because if you write it this way, it writes a date 33. Isn't it? So this one is like 300 over 1, isn't it? Or it is 33%, isn't it? 33.3%. Then you change it. So 33.3 is like 33 over 100 percentage. This is in percentage, isn't it? 33% is in percentage. You change it to margin before you multiply, isn't it? Then H sold an equipment to S Limited for 150, marked up at 50%, isn't it? We have unrealized profit on sale of fixed assets equal 150, isn't it? You multiply by 50 over 150, isn't it? We've already changed the markup to margin, isn't it? The depreciation overcharge, isn't it? So depreciation overcharge will be 20% on cost, isn't it? So 0.2, you multiply by the 50, isn't it? That is the depreciation overcharge. Then intergroup balances, of which it is just 20, isn't it? So I think we'll stop there. When we come to the next class, we will present this one. Then we go to Uongozi. Uongozi, this one is a group cash flow statement. After here now, we'll go to analysis of financial statement. The class ends there. See you tomorrow. Hope you learned something